Banking system in India. The banking system in India evolved over several decades, is well established and has been serving the credit and banking needs of the economy. The major role of banks is to intermediate resources from the depositor to lender for the mutual benefit while allocating them in an efficient manner, thereby contributing to the economic growth through enhanced efficiency in usage of resources. There are multiple layers in today's banking structure to cater to the specific and varied requirements of different customers and borrowers. The banking ecosystem is providing impetus to economic growth and development of the country and catering to the specific and varied financial requirements of different customers and borrowers. The structure of the banking system of India can be broadly divided into scheduled banks, non scheduled banks, and development banks. Banks that are included in second schedule of RBI Act 1934, which are considered to be scheduled banks. Presently, 135 scheduled commercial banks are providing banking services in India. In addition, cooperative banks and local area banks are also providing banking services in various segments in different locations of the country. For the purpose of lending to specific sectors or segments, around 9,306 non-banking financial companies NBFCs registered with the RBI as on 30th June 2024, and 5 All India financial institutions are also catering the needs of the borrowers. Scheduled commercial banks எதெல்லாம் சொல்லுவாங்கன்னா பப்ளிக் செக்டர் பேங்க்கு, ப்ரைவேட் செக்டர் பேங்க்கு, ஃபாரின் பேங்க்கு, ரீஜனல் ரூரல் பேங்க்கு, ஸ்மால் ஃபினான்ஸ் பேங்க்கு, பேமெண்ட் பேங்க்கெல்லாம் வந்து ஷெட்யூல்டு கமர்ஷியல் பேங்க்ஸ் கேட்டகரியில் வரும். Scheduled commercial banks, public sector bank, State Bank of India and 11 nationalized banks are established under State Bank of India Act 1955 and Banking Companies Acquisition and Transfer of Undertakings Act 1970 or 1980 respectively. Foreign bank is a bank that has its headquarters outside the India but run its offices as a private entity at any other locations in India. Such banks are under an obligation to operate under the regulation provided by RBI as well as the rule prescribed by the parent organization located outside India. Private sector bank. Private sector bank are the banking companies licensed to operate under Banking Regulation Act 1949. Regional rural banks are the banks established under RRB Act 1976 with the aim of ensuring sufficient institutional credit for agriculture and other rural sectors. The area of operation of RRBs is limited to the area notified by the central government. RRBs are owned jointly by the Government of India, state government and small sponsor banks. Small Finance Bank licensed under Banking Regulation Act 1949 and created with an objective of furthering financial inclusion by primarily undertaking basic banking activities to unserved and underserved sections including small business units, small and marginal farmers, micro and small enterprises and other underserved sections. Payment banks are public limited companies licensed under Banking Regulation Act 1949 with specific licensing conditions restricting its activities mainly to acceptance of demand deposits and provision of payments and remittance services.